Looking back today, we had some nice gains earlier in this week. Of course, last night we had the Dow Jones closing weaker and really spooked a bit by some warnings coming out of Cisco Systems.
Yes, Cisco, the technology bellwether of the United States, really coming out saying with a negative forecast going forward, just showing that business is not really going well in America. And, you know, for a bellwether to come out with a negative forecast is not good news for the market. So we saw the Dow Jones and the S&P close down yesterday, and that filtered through to our markets. Also, I mean, look, the G20 summit is on, and then, you know, that's weighing on our minds, as well as you know, the fact that China's inflation has gone up quite a bit, and therefore the expectation is that the Chinese central bank may end up hiking rates there, so which will therefore curb demand for resources as well as general demand in the market. So I think, you know, a lot of caution out today as, you know, a bout of bad news comes out into the market.
And of course, we had a Veterans Day holiday in the United States yesterday, so the bond market was closed, stock market was trading. Friday today, so you would expect a bit of lackluster trade heading into the weekend, I'm sure.
Yeah, lackluster trade and a bit of profit taking. I think, you know, gold has rallied quite hard. We've seen the resource stocks rally a little bit too there. So we'll see a lot of profit taking, and currently the resource sector is the one that is weighing us down the most. So yeah, it is Friday. There's also a lack of economic data coming out of the United States. I believe we're 12 o'clock, the Eurozone brought out their GDP numbers. I'm not sure what the figures were there. So that's really the only thing that we're watching out for today. But yeah, a lot of lackluster trading, profit taking, Friday afternoon fever.
Because that G20 summit winding up today, it started yesterday. What would the market like to see come out of this? Is it expecting anything concrete at all to come out of this meeting?
No, I think majority of players are not expecting much. I think they're expecting a lot of talk from the G20, but you know, maybe a little bit of clarity as far as the currencies are concerned. What measures are they going to you know, suggest to the market, and as well as you know, banking regulations, new measures there, and the IMF's role in defaulting sovereigns. So I think you know, a lot of expectation has been put in the G20 summit, but you know, just as a cautionary measure, but we don't necessarily expect a lot to come out of there, as we're also dependent on what the US economic data is like, and also what happens in the United States in general.
Well, you mentioned sovereign debt problems, and of course Ireland's was really weighing on the euro at this point. We have the euro trading just above 136 this afternoon, so the weakest in 6 weeks. Do you think that's adding to the pressure we're seeing on commodity prices today, and the gold price, which has pulled back quite sharply?
Yes, I think the euro is there, but you must remember that I think it's a dollar strength that is driving down the euro, as well as gold, as flight to maybe US treasuries or other alternatives. You know, I think the players are just so concerned about the bad news that keeps coming out of Europe, and you know, it's just a reminder of what we were going through earlier this year, that it hasn't really changed there. There's no improvement there, and Ireland remains in problems. And we expect soon that perhaps the other previous members of the EU that were giving problems earlier in the year will resurface. So I think you know, what we're seeing really is more dollar strength, the flight to safety.
Well, we had very few winners on the top 40 this morning. One of them, Richemont, in fact, leading the winners. Its shares were up well over 1% just a short while ago. And we had some half-year numbers on from that company. What was the market making of those numbers?
Well, the market certainly liked the numbers. Initially, there wasn't much reaction to it, but last I checked, it was up about 2.6%. And you know, like, they had a very stellar performance in the first 6 months, and already 1 month into it, I think I read somewhere that in October they had already seen about 26% rise in sales already in just the month of October. But look, as you guys mentioned earlier, they do expect that the second half will be a lot tougher because of the strong Swiss franc, and you know, that affects the cost of inputs, and you know, but Asia Pacific and the Middle East were very good to that market, as well as the Americas. You know, they had very, very strong sales there, and I think you know, it was a very good showing that the market really appreciated. So, but it makes me wonder, where do all these rich people get their money from?
I was just looking at that share price. It's now 3.5% higher, so really extending those gains. Billiton, I suppose the market will be watching very closely next week, as they're having a shareholders meeting, and lots of issues on the table for Billiton going into that meeting.
Yeah, I think they've got a vote, I believe, on Tuesday regarding whether they'll do a share buyback, increase dividends, or, and also I think there's going to be a lot of talk about the potash, a hostile takeover. I mean, if you recall, a few weeks ago, Canada actually opposed, or just about opposed the shareholder, the takeover, and they'll need to convince them by the 3rd of December to reevaluate the takeover attempt and perhaps approve it from a regulatory perspective. And I think the offer for potash expires on the 18th of November. So it will be a very interesting week to see what they do next week, whether the shareholders just want that money paid out to them, or they wanted to perhaps refocused in other areas. And I think there are a good number of shareholders that still believe that the $39 billion offer to potash should go ahead, and perhaps a little bit more. But with $12.5 billion dollars in cash in that company, perhaps some people are also thinking that, rather pay us out and stop pursuing this hostile takeover that's actually costing the company a lot more than was initially anticipated.